This is Market Week Live, information and support for traders and investors for November 10th, 2023. Have a little bit of legal stuff to take care of before we get rolling. This tells you that everything that we do at askSlim.com is for entertainment and educational purposes only, not to be construed as investment or trading advice. Everything that we do on the website, oral, written, any way that we may present it to you, is information that you could use for discussions with your investment advisors. For your investments decisions, we always ask you to consult your own trading plan or your financial professionals before making investment or trading decisions. Whoops, one slide too far. This is a live event being held for support for our members and are not included in memberships. We just do them now for our for people out in the public. And you'll be able to see lots of what we do every single day for those people that aren't members. They're created for times of special needs, and note these events will be recorded and that at times they will be offered for public viewing. Certainly this one is. We'll always act in ways to protect your identity. Still, we can't guarantee that. So participation says that you agree and understand that. You can always get our legal at askSlim.com. All right, today, sadly, we're missing RV. He is away, so he won't be joining us today. It'll be the three of us, me, Steve Miller, known as Slim, Matt Serpe, and Katie Anagostos. We are three of the four experts in the askSlim method of analysis. And you have seen that at work, and we'll be able to tell you a little bit later about ways that you can continue to learn what we are doing here at askSlim, because certainly we are a unique set of analysts. You can learn about us by going to askSlim.com and meet the team, and you can watch our interviews in there and you get a good sense for who we are. Contact information, well, about memberships and website issues, you can write to team at askSlim.com. That's for anything about our content, information on educational analysis, our first-time specials, anything that you see in here, you can write to Matt at askSlim.com. All right, let's get rolling in here. If you are new to our website, please do subscribe. There's lots of ways for you to do that. If you would just want to get acquainted, sign up for our SIR Lite. That is free. You're going to get information on the S&P 500 and the stock market every single day. On YouTube, subscribe to our channel. That's askSlim Team. Click the notification bell and like this video. Give it a thumbs up. Follow us on X at askSlim. And again, anything that you have question-wise, write to Matt at askSlim.com. Coming up in this show, I'm going to bring you my opening comments on the market. Matt has an introduction to some of our products and services. Then Katie and I are going to bring a great segment. This is a segment that I used to do way back when I was on Tasty Trade called Quant Meets Tech. And I'm going to be the tech on this. Katie's going to be the quant, and we're going to combine our analysis that we do with a strategic option strategy. So I'll do the analysis. Katie's going to bring you the strategic option strategies, and we'll do that as a team, bringing it all together for you. On our express round, where you're going to be able to ask a Q&A, this is for level 1 to 4 members that have been invited here. Your questions you can ask on our services, trade planning, chart analysis, trading issues, even emotional issues, trader psychology issues. You can ask those of me because I'm well trained for over 2 decades on that, and the floor will be yours. Then I'm going to bring you some information on our cycle analysis special, and don't miss these bonuses. And I'll bring you my stock market analysis. A look at SPY, short and intermediate term analysis. We'll look at some of the proprietary studies and our market condition monitor. We're going to get rolling right now. For those of you that may be watching for the first time, you can watch the show if you're watching a video on this next time we do it live by becoming a premium member. You'll be sent a link to participate, and you'll be able to participate in the Q&A. For our free and non-members, you watch it on YouTube at the askSlim Team channel. All right, so let's talk about what happened this week and what's going on in the markets. Well, the stock market had its best run in 2 years with a huge 11% gain I'm sorry, huge 9.5% gain for the NASDAQ and a 7% gain for the S&P 500. That was after an 11% or so decline to the downside. So it was an 8-day rush after a 3-month decline. Amazing how fast that moved to the upside. It did very quickly, abruptly ended on Thursday as the 30-year auction came out. That was horrible, where the tail was just the biggest one we've seen in months and months. And dealers had to take 25% of that offering. So that is really a bad auction. And of course, that's the problem when you have to raise all of that money because the government spends ridiculously. And what happened was the bonds fell 2 points and the S&P 500 moved down 44 points. It was a very quick downside move as well. After that big 8-9 day rally that we saw in the stock market, it makes sense that it would give some ground back. Of course, you can't really stop a rally like this so abruptly, and buyers are coming back here on Friday. Even with 7 of the Fed heads out there this week speaking hawkishly about the prospects for interest rates, the bond market was fairly strong for most of the week until that auction came out. And Apple leading the charge on the upside as we continue to see the technology sector be very strong and the market leaders. Most techs were up except Tesla is really having a bad time of it. And actually, we're bearish on Tesla. And I could see the stock easily falling from where it is now, around 210, 211, down to 175, and maybe even as low as 140 next year. I'm going to take some heat on that one potentially, but our patterns really are showing Tesla in bad shape. The buyers now are here Friday, clearly back into the market, and that's despite all of this Fed talk. And most people that are investors in the market think that the Fed is done, and that's why they're very willing to commit to the market right now. And I really have to agree with them, at least for the short term. And we've been saying that. We thought that interest rates had bottomed and we were going to see a rally in the bond market, and that really did come. But outlooking into next year, March, April period, I think rates are going to be significantly higher again. And I think that could be a very big disappointment for the stock market into the first quarter of the year. So for now, we think it's okay. I'll say more about that, of course. Let's go back to the text for a moment. And, as I said, again, they are leading to the upside. And I think things are very out of whack in this market. Let's just take a look at this slide. This is sourced from Business Insider, and this is the tech sector relative to the S&P 500. This is really significant when you look at that. This is a 2 standard deviation level, and this is the tech versus S&P, the relative price. And you can see back here in 1970, it was about at the 2 standard deviation level, and then you went through this long period where you had a secular bear market that it went continuously down into the mid 80s. That's the relative strength, the relative position of techs in the S&P 500. Then, of course, it blew up again here into 2000, where you had the dot-com bubble, and it gave the ground again back to the mean area right over there. And look where we are now, the relationship of techs to the S&P 500. I've been talking about the fact that the stock market is likely to have a secular bear market, and we're just having a rally in it right now. And this is really a problem when you look at that, because the relationship of the techs in the stock market is saying that at some point there's going to be a very significant, potentially long-term and painful correction as far as the tech stocks goes. That's why I really think that the stock market is going to have a lot of trouble for the coming years out there. And that's why I believe that if we have these strong rallies that we're having right now, and I'll show you where I think there is more rally coming in this November, December period. You know, we said that the stock market would likely be weak into October, towards the end of it or beginning of November, and then turn up and be better for the last couple of months of the year. And we're seeing that right now. But I believe that these rallies are still for selling. S&P 500 potentially up to 4,500, not all that far when you think about it. But I think that into Q1 of 24, along with I'm talking about in the interest rates, which I think will go higher, the market could have a rough time again. So you could see the condition there as far as the relative amount of strength in those techs, and that is very likely to correct. For the market to continue to do okay, I don't think the techs are going to be leaders. And I think you're going to have to see the cyclicals take over, the old economy stocks take over again, with the techs not going anywhere. That might be a challenge for a lot of investors, not knowing exactly where to go in the markets. But I think it's important to know that because the techs have such a high weighting in the indexes, when the time comes that they're underperforming, the indexes are going to have a very hard time moving up, even if the broad market is doing so. That's what I'm saying here about the stock market. For the week, stocks are mixed. Now, they look strong. When you look at the S&P 500, that's up a little bit. The NASDAQ up a couple of percent. But the Russell is still down close to 4%. So those small tech stocks having a very hard time of it. And that's even with interest rates coming down, and they're such heavy borrowers. So that's a look at a mixed market this week, but still overall, you have to say very strong. Bond market was choppy this week. It kind of has small net change. It was going up and down. The 10-year yields are up a couple of basis points. But with all that movement, not a lot of net change on the week. Gold market selling off hard again. And for those people that are level 3-4 members, you'll be getting our updates on our charts over the weekend. And I have done that work and revised that short term to be more negative, even though I have a very positive intermediate and longer term outlook. I think that after that big rally in the metals markets, it's going to give some ground. Platinum is an absolute nightmare. It's down $85 on the week and looking in terrible shape. The dollar up about 0.6% on the week. I think it's peaked, and it's going to move down to about 104.5 just in coming days. So we'll look for the dollar to turn down again. Oil, third week of getting crushed, down $4, and that's all about China and the big slowdown over there and the expected lack of demand coming from there. And, you know, with the bond market, interest rates coming down so much, there's a lot of anticipation that the U.S. is going to slow down. Also, there's lots of stuff that says the consumer is just spending their last dime of cash from the pandemic, and they're starting to really build their the credit card debt, and that's going to really slow things down. And that's why oil has gotten so weak, despite the fact that we have Saudi and Russia trying to hold the price up. So oil extremely weak. I expect after these 3 big down weeks, we'll see a bounce. We're looking at to get up over $80 on the short term, but then I think it's going to be moving down big again. That is the look at the stuff in the beginning and my comments, and I'm going to turn this over to Matt, who's got a review of products and services, and he's going to look at the new day trader service and Charts Hub. Matt, take over.
Thanks, Slim. Hey, everybody, it's Matt. All right, so in this brief segment, as Slim mentioned, I'm going to take a peek at a couple of our services. Just going to share my screen, get started. With our premium memberships, you can depend on world-class technical analysis, trade planning tools, education, and support for active traders and investors. At askSlim, we are pure technical analysts. We're bull bear agnostic, and we let the charts do the talking. Our askSlim methodology. So we utilize Slim's unique analytical methodology where he has been dedicated to this craft for 6 decades of continued refinement and innovation, from the hustle of the CBOE trading pits to the book that launched Slim's illustrious technical analysis career. This journey has brought him now to be the preeminent cycle and technical analyst. So what I wanted to show you is, as an extension of that development process, we have 2 awesome innovations that the team here, guided by Slim, we have developed exclusively for our premium members. And those 2, as Slim mentioned, are our askSlim Charts Hub and our new day trader service. So first, we're going to take a peek at the askSlim Charts Hub. I'm going to pull over my level 2 dashboard because it's available in levels 2 through 4. All right, so I'm going to scroll down to the Charts Hub. And as a trader and a technical analyst, we all know that to be efficient, we have to be able to have our tools at our fingertips. And with the new Charts Hub that we launched just recently, you have the ability to review.
Matt, that didn't open. I saw you click on it. Did you want?
Okay. Let me refresh that. Let's see here. Let me get back to the dashboard and refresh our. Sorry about that. Not sure what's internet's running slow right now. Here we go. Get back to our Charts Hub. All right. So as I was saying, you want to be able to have charts at your fingertips. And with the new Charts Hub, you have just that. We have 84 of the best and widely held traded stocks, ETFs, and futures. So what you can do is you can basically pick any symbol of interest, click on that symbol, and that pops up our weekly chart. You click on it to see the full-size version. What's important on all of our charts is that you have the ability to see key information, and that includes our cycle timing. So we have our cycle brackets on there. So very quickly, you can get a sense of what that cycle timing is in terms of where we are in that phasing. When are those periods of risk, both on the downside and then when that money flow shifts back up to that upside. And then also we look for and include our momentum analysis. So we have proprietary momentum indicators that we utilize and we overlay on these charts, a reversal scout, our askSlim, the Slim ribbon. So those are posted on there. And obviously we also have key levels that we put on all the charts. So again, very easily, very quickly, you can go to our Charts Hub, you can pick the symbol of your choice, and you can quickly see those charts and get a sense of the technicals very quickly. And also on there, there is a technical briefing, and then there's the cycle low dates. So you can pinpoint when those dates are, where we're looking for those periods of risk, both on the upside and on the downside. That's our Charts Hub, an amazing set of symbols that we cover, as I mentioned, from the most widely held stocks, ETFs, and then futures markets. All right, next we're going to talk about our new day trader service. We're super excited that we've recently launched this one. I'll pull over the dashboard for it, and we'll go live and look at it. So our day trader service includes our new impulse monitor, and it also includes our SIR intraday grid 2.0. This has specifically been designed for day traders. I'm going to pull over the setup right now so you can see this, and then I'll show you our robust resource section that we also have. So this is a live picture of our day trader service. So on the left here, we have, and I'll scoot this over a little bit, our Impulse Monitor app, which has been designed with custom algorithms to pinpoint when conditions, it's a condition signal for impulse moves. So the first and foremost thing that we want to be able to identify is what is that dominant intraday momentum trend. And once we've identified that price and momentum trend, we also want to then pinpoint when the next impulse move is. When's that the odds that favor the next largest impulse wave. So again, on the left here is our impulse monitor, and we have outputs that represent the various conditions. And the two most important conditions that we're looking for is obviously when we have an impulse on in the upside, and then when we have an impulse on in the downside, and then we have variations of when the impulse is basically off or it's neutral. So right now you can see that on the Qs, the impulse went on at 10 a.m. Now, if we move over to the SIR intraday grid 2.0, essentially this is a price roadmap. So every morning pre-market, this is distributed to our day traders, and they, throughout the market session, they can observe the price action in combination with the impulse monitor to give yourself a sense of where we are relative to key levels. And most importantly, what we're looking for again is what are the intraday trends, and then also what are the highest odds when you have the opportunity for the biggest move in that directional trend. And so this morning here, we can see that we gapped up in the Qs, we pulled back, and as we know, and from a textbook perspective, once you get through resistance, you can watch for it to become support. So in the Qs as the example here, and I'm going to zoom in a little bit so we can see this a little closer. Just at today's price action. Again, we had that gap up, came into that second level or layer of resistance, textbook pullback, but then that first layer of resistance that it pushed through, it paused, and then we can see that the impulse monitor turned on at 10 a.m. So let's just look at where that is. It's right around here. The impulse monitor turned on, and at the same time, both of our, we call our reversal scouts. We have a reversal scout swing, which picks up on a larger intraday trend, and then we have a reversal scout scalp, which is picking up on that secondary trend. Both of those also turned positive. So you had alignment between the impulse monitor being on in a positive way, and then the two reversal scout price trend indicators on. And then you can see that rally really accelerating. And then we also pinpoint when there's a likelihood of a void or a gap in the price vacuum when it comes to resistance, where you are expecting to see a penetration through that resistance zone. And what we have here is that happening where we went all the way through that acceleration zone, that price vacuum that we try to identify pre-market. So again, this is done pre-market. And if there are big moves during the morning, I will update the grids and add new levels that indicate the price zone roadmap. And I did do that this morning once the impulse monitor went on in the Qs and the reversal scouts went positive. I added in new levels on the upside, and these acceleration zone really played out well. So that's the objective of the impulse monitor in combination with the grid and our new day trader service, is to give you those high probability scenarios and be able to show you very simply when you have the highest odds for an impulse condition. All right, back to you, Slim.
All right, that's fantastic. I'll just keep that up for a second here. This is so important because look at how well for day traders this puts you in the right direction. If you follow this, and you can see the SPY, the QQQ, were impulse on. The IWM, which is really languishing there, was just simply neutral. It told you which were the strongest. It gave you the acceleration zone, and it prevented you from being on the wrong side of the market, which is such a key for traders, that they don't get on the wrong side of the market, because that's how they get their win-loss percentages wrong. And getting on the right side of it is how you get the win-loss percentages right. The size of your win versus the size of your loss, and the number of wins versus the number of losses. This is one of the best day trading setups for signals, for market conditions, than I have ever seen. Of course, the signals and the entry and exit come from the trader's own studies, the work that they do. These are not entry and exits. This is just simply market conditions to help you get on the right side of the market. So great work on that. I really like the way that you explained that. And I think that people that are day traders will absolutely love this. We have a special going on right now on that, Matt. You want to just talk about that a little bit?
Yeah, for sure. I just wanted to come back here real quick and also let people know that we have a very robust resource area. So we have two sections here for educational information around the service. We have more general information with the overview of the outputs. There's an introduction that was done by Slim. Then there is a review of all of the information on the SIR intraday grid that we have here. Goes through all of the various key price zones. And then we have end of day screenshots that we take so that you can see what that intraday looked like, the grid, how it finished up. And a lot of resources in there. And then also something that we just released this week are our webinars and trainings sections. And Slim's already done 3 awesome trainings on the impulse monitor and the SIR grid relative to the price action, where he steps us through what happened throughout the session and how the both of those products could have guided us in terms of what is going on. And so we can plan on continuing to build this out and make sure that if you are members that you are checking this out. And as Slim mentioned, we do have a excellent special going. It's $24.50. It's 30% off for the first month. It's unbelievable information. You know, basically it's about $1 a day to test it out for getting insights into a methodology that I mentioned in the beginning that Slim's been developing for now 6 decades, that we continue to surface new technology around. So we're here to support our members. We want you to be successful because our success is your success.
Great, absolutely. Okay, I'm going to take this back over. And that concludes Matt's little segment in here of great in-depth look at these services. And now we're going to move on. This is a nice little segment we're going to do, Quant Meets Tech. Back when I was in Tasty Trade on the show, hosting every day at noon, we used to do this type of a segment. I wanted to bring that back together. This is where a tech looking at charts joins with a quantitative analyst. I'll be the tech, Katie will be the quantitative analyst, and we're going to show you analysis on Caterpillar, and then Katie is going to bring you a look at the strategic option approaches is that you can do based on the analysis that we're looking at. So let's just switch over now, take that off for a second, and we'll look at the chart of Caterpillar. So for those of you that happen to be brand new, what we're looking at here are charts of, on the left side, let me just get these pointers up correctly so I don't, there we go. So on the left side here is a look at the weekly, on the right side is the daily. And we're looking at cycle analysis, which is essentially the heartbeat of the market, the rhythms in the individual symbols. Every symbol has its own rhythm, its own cycle periods, though like symbols often have very similar or the same periods. Now you can see in here, and I'm just going to blow this up, right here, you can see that Caterpillar has got some pretty consistent cyclical periods in there. Now I'm going way back here to 1919, and that shows you these beautiful rhythms in the market. We'll just look at these last 3 right over here, and you can see where this was coming down. That's where this correction came. It was perfect. And this area in between plus the ideal low, which is plus or minus a few weeks, is where you normally would get the low or the trough. You had the shooting star here, and that's giving us a warning that it's turning back up. Now, I want you to see something that's important to look at. This is our reversal scout. Like Matt showed you on the 15-minute chart, here it is on the weekly chart. And when it's turning up, it gives you a pretty good indication of the cycle low having occurred. And when it turns down, it gives you a pretty good idea of a cycle peak having occurred. I want you to see momentum in here is still negative. So while we're looking for a bottom to form in here, we still have to have some caution around that. It means that the approach that we would take would probably be cautiously bullish right now. Let's take a look here at the daily chart, and you can see, well, a pretty similar thing where you have the cyclical rhythms in there lining up. There's a dominant cycle and a minor cycle that shows up. This is really interesting because you see when the minor cycle is coming down and correcting, but the dominant cycle still is moving up. That's how you get formations that tell you things are bullish, because it runs out of the downward pressure on the minor cycle it forms the triangle, and then when you get into the next rising phase, it moves up. You might hear that triangles have a 2-to-1 risk reward of coming out of them in the same direction as they went in. This is why. And we teach this in the cycle workshop. You can see the same thing here where the cycle failed. You got this rally right in here, but it failed in resistance. That gave you a flag. It said it was likely to come out on the downside just as it went in. Momentum in here negative, as you can see, and it came down right into this cycle period right over here, created an island. Now that island bottom right at the point where the daily cycle and the weekly cycles are all saying a bottom says to us that it's pretty likely that this is going to be moving to the upside again. Again, momentum negative in here. And you could see the slim ribbon PO giving you these signals in here that says the stock still isn't in the greatest shape yet. We need to see some improvements in here. And upside targets are right over here, about 249 up through about 257 with a potential at 264. So that's the kind of thing that we're looking for over these next several weeks. And overall, this is a cautiously bullish look at cycle analysis. The sum of the evidence says that the bottom is in place, but it has still work to do, but likely to find buyers. Maybe after those tech stocks stop moving up, they'll start to look into cyclicals like this one, and it will begin to move up. Cautiously bullish. Katie, I'm going to turn this over to you as our quant right now. What would you do under cautiously bullish conditions as far as options go?
Okay, I have a couple of ideas. Let me share my screen first.
Sure.
Can you see the askSlim homepage?
Yes.
All right, so we're going to look at some options trade ideas on the Tasty Trade platform. They are our preferred options trading platform. And if you like what you see after we have spent some time there, then please go to the askSlim homepage, hover over this Marketing Partners tab, and click on Tasty Trade. That will take you to a page where you can learn more and open an account with them. And doing that with our link here helps you with a special bonus and also helps us. Now let's go over to Tasty Trade. I have Caterpillar loaded in here, and I'm going to be using the December 29th expiration cycle with 49 days to go. The monthly expiration, December 15th, only has $10 wide strikes, whereas the weeklies have $5 wide strikes, and that's going to allow us to be a little bit more flexible with our strategies, especially for those who might have smaller accounts or who have a lower risk tolerance. Now, in my opinion, the analysis that Slim showed us is perfect for layering strategies. And what I mean by that is that we're looking to the bullish side, but the price action and the momentum are not confirming that yet. So if I were going to be placing a trade now, what I'd be looking at is a more neutral to bullish strategy. And then as price and momentum start to confirm a bullish hypothesis, then I would add a more directional strategy. So one neutral to bullish strategy is a jade lizard. It's a combination of an out of the money short call spread and an out of the money short put. When we set that up, we need our total credit collected to be greater than the width of our spread. So that will ensure that we have no risk to the upside. So let's set this up. Tasty Trade has this strategy feature here. We can click on the down arrow, find normal jade lizard, and hit go. And that will throw a jade lizard in here, but it's up to the user to then move the strikes around. Now, I want to give us some room to the upside so that we have some profit potential in case the stock does not move very much. So let's move this call spread. Actually, I'm just going to leave it right there, 245, 250 call spread. Now, remember I said that our total credit collected needs to be greater than the width of that spread. So we need more than $5. So let's move our short put up to the 230 put. That is going to give us a total credit collected of, let's just move it up to $6 and lock it in so that we can just use the math like that very easily. So $6, and then let's go and take a look at the risk graph. Let me zoom it in a little bit. Let me zoom it back out so that we can see it a little bit better. There. All right. So notice that we have a max profit zone between our short strikes. This is 230 is our short put, 245 is our short call, and this max profit zone is $600. Excuse me for just a moment. Okay, so max profit is $600. Now below 230, our profit starts to decline down to our break-even point at 224, which is just around our cycle low support. Now, if price breaks that level, you're going to want to close this trade anyway, because the hypothesis will no longer be bullish or even neutral. Now, above 250, where our long call is, our profit potential goes down to $100. So that's not as good as this zone in here, but still profitable. And this is where I would layer on another strategy. Now, Caterpillar is an expensive stock, and this is an undefined risk trade. It uses a lot of capital. In my account, it's over $4,000 to place this trade. So let's go back to the table page, and I will show you how you can define your risk. So our undefined risk is here on the put side. So I'm going to go and buy a further out of the money put to define the risk. And that's also going to lower our capital requirement. So I need this credit to stay above $5 to have no risk to the upside. So that means I have about $1 to use to buy a put. So let's go and buy we can try the 210 put, but that drops us down to 490. So let's go down to the 205. The 205 put, notice that that cut our capital requirement by a lot. Now it also did cut our profit potential, especially above that 250 level. If we go back to the curve view, notice, I want to drag this over. Notice that it went from $100 down to just $60. So with options, there is always that kind of a trade-off. Now, this profit zone in green, as I mentioned, basically covers the area from the cycle low support on the chart that Slim showed on the daily up to about the bottom of that resistance area where we have our projection. And also, for those of you who are familiar with option strategies, buying that put has basically turned this into an iron condor, a skewed one. So then once price and momentum starts to confirm bullish, you could go in and enter, say, a call debit spread. Now you can make it as wide as you like, depending on your risk tolerance, account size. So a $10 wide would look like this. Let's buy an in the money call, say the 235. And then we're going to go and sell an out of the money call against that to reduce our cost basis. Let's sell the 245 call. This requires that we pay a debit of $5.25, $5.25. That's our max loss and capital requirement. Our max profit is the difference between the width of the spread and the credit collected, in this case, $4.75. So here is the risk graph of that. And basically, we just need a move higher. So those are two possible options, trade ideas that you could consider for that type of analysis. Back to you, Slim.
All right, that was just absolutely super well done. I am sure that people look at that and thought, wow, that is great, a great showing of one of the best platforms and options, and that's Tasty Trade, and how you use that. It was just great that Jade Lizard was already in there. All you have to do is click that button and it sets it up for you. So that's it. That's Quant Meets Tech. That's a look at putting together the askSlim analysis with the option strategies. And you can see Katie really knows that stuff. Great work. All right, we're coming into our Q&A period right over here. This is when we answer your questions that our level 1 through 4 members who are attending this have put in. We're going to do our best to answer a whole bunch of them. Some of the requests I see out there are out of our universe of analysis. So we won't be able to answer those. I'm going to start out by answering some of the questions on the futures. As far as the stock market goes, I'm not going to take any of those now because I'm going to do a stock market presentation after this. So I won't be answering any stock market questions right now. The equity and ETFs, Katie's going to handle after that. So Katie, you'll have a list of things that you're going to cover. Then I think I'll probably do about 5, and Katie, maybe you'll do about the same if you have that many to do. And then we'll have to cut it off at that point because we're going to be running way long. So let me just take some of these questions in here that don't have to look at charts really quickly. Ray is asking, when will the big picture of the stock market be? I always do that around the beginning of the year and at around mid-year. So that's what is my intention. Generally, if there's something very unusual that happens, I'll do a special one. But being that the market's pretty much followed our analysis, there's no real reason for me to do anything until around the end of the year. Simply, I see you put a question in there, but I'm sorry, I don't understand it. Walter, you're asking about light crude. You're asking, do you see further downside movement in WTI, West Texas International, because it moved down at the beginning of the show. I talked about that and said that I thought it's going to move down pretty sharply after a rebound to over 80, maybe to about 80, but I still think that the pattern is quite negative. Jeff says he recently transitioned to thinkorswim platform. That's great. How do I get charts on the platform? Well, in order to get live charts on thinkorswim, which is where we do all of our work, you would need to become a level 4 member. The Charts Hub, which was demoed by Matt earlier on the show, shows you how you can get static versions of them. But if you want to have them live, you need to be a level 4 member. And that you can get it. If you're not, you can get a special on that by writing to Matt at askSlim.com. The Charts Hub are, every time there's an update, Roger, in the Charts Hub, then our staff grabs those and then loads them into that. It's usually done in some matter of hours. So I hope that's clear. We don't wait too long in there, just a matter of the staff getting to it. Okay, so we have some questions in here on gold, bonds, copper. Gold, bonds, copper, and Bitcoin. And that's what I'm going to do, those 4 right now. So let me switch over to the charts. And we'll look at the gold market. Now, the gold market analysis was updated just a little while ago. This has not been updated to our members yet because I just did it as things were changing just before this show. So let's just look at the weekly first. And for the intermediate pattern, this is extremely bullish. Now, right now, you can see it's getting down to the first level of support over here. And it's fairly likely, with the momentum having turned up right over here and the cycle lows looking like right over here, that once a correction is over with, this is going to be moving up again. It could not get through that important 78.6, which is at around 20 and a quarter, 2030. If it did, then it would likely test the all-time high, and we are looking for that or even higher into next year. It does have to hold these supports right over here, and it would be nice if it didn't get below 1900, but still we're in a corrective period right there. When you look at the daily chart, now this is really where the update has come. we were projecting the likelihood that this would bottom in here on the minor cycle and then move up again to a higher high. But you could see that did not happen. And this is called a left-hand translation. That means that this next minor cycle peaked very early on the left side of this. And you learn that in the cycle analysis workshop. And then if that happens and it gets underneath that low, then it says that it likely will continue the correction through this period right over here. Also, the dominant cycle says that it's likely to come down over there also. Now, the key is that this period right over here is what's known as the period of risk. And I'm just going to grab this right over here. And that's what these yellow areas are, where the biggest corrections come. It's important, as you see right over here, you see where each of these periods of correction are and the cycles coming down, multiple cycles pushing down, that it does not get underneath here, or certainly not under the 78.6, which is probably right around 1870, 1865. We want it to correct in here and hold in these areas and then set up the next rising phases over here, which, going back to the weekly, would take you out to a rally out over here into December, where it then probably meets into more correction there. So this looks like it's potentially a choppy period out over here, with the most favorable period in January, February, and that would align up over here with a cycle that's even beyond the one that you're looking at here. So this is not good. The momentum was lost. You can see that where it was positive here, but not really be able to put much on, and then turned on the slim ribbon PO as neutral, the slim ribbon rolling over and turning to neutral. And that says the next 2 weeks are a problem for the gold market. And we really wanted to hold in these supports to confirm the overall very bullish scenario that we see in this bigger picture. I'm just going to go out over here. And this rally that you see right over here is only 3 weeks old. And you could see these rising phases last for months in there. So not likely that this is a peak, much more likely it's going to fall for a couple of weeks and then turn back to the upside. So that's a look at the gold market. ZB is the next one that was requested. And you can see in here that we were positive on the bond market. I still have these colored phasing in there in the bond market. And that shows you that this rising phase, that's this slightly shifted cycle right over there. And it came to the first resistance level right over here around 114.30. We're projecting it to get up to 117.5 to about close to 120 up there, but really 117.5 is what makes the most sense. And early in the show, I talked about what I thought was a period where interest rates were going to go up again into the March-April period. That's this right over here. I think that this area of resistance is going to be a failure, and that rates are going to go up again over here, which is not what most of the market participants believe. Here you have the cycle periods, and here you're rallying right now. These are the resistances from the weekly, and this is that 117.5 number right over there that we kind of think it's going to get back to. Now, this right over there, that is an engulfing pattern, and that is a warning in here, if you do candlesticks, that it potentially has reached a level that's going to be a problem for it. It's important to consider that also. So see this 10-year, this message right over there, the 10-year yield trough. In other words, the low in the 10-year yields, which are moving down now, is likely to come around December 1st, which is plus or minus maybe 3-4 days. That's why we're looking for the bond market to hold up into that. But then I look for yields to go back up after that period. So that is a look at the bond market analysis, the bigger picture on the left on the weekly, the short-term picture on the right. Copper is the next thing that we were asked for, /HG in the copper market. These are all things that we keep updated all of the time. And again, if you don't want to be a level 4 member and get them live on Thinkorswim, become a level 2 or 3 member, and you'll be able to get those in the charts hubs that we have. This is a look at copper, and you could see it made a low right about the timing it should. The ideal low in there was around early November, and it made a low just a week early. It gave you this morning star pattern, rallied, and now is pulling down. You can see that. But really, this looks like it should be making a low there. If it goes down one more time, if it did it right now, I guess it would be acceptable. But overall, looking at this pattern on copper right over here, this does look like, as we said in gold and silver, it has about another week to go before, or 2 weeks, before it then gets into a period where it could move up right over there. So it needs to hold that important level right over there. I'm just going to grab this so you can see where that is. And that's that low right there. So it needs to hold above that. If it gets below that, well, that's a lot of trouble. We'll look for a couple of weeks of back and fill in here and choppiness, and then turning up again. We do not want to see it get under that low at 352. That would be a really bad thing. So that's a look at the copper market. The last thing I'm going to look at is Bitcoin on these requests, /BTC. Bitcoin is surging on the upside. Let's look at the weekly first. And you can see in here that it has gotten up and stalling around that 161.8% fib extension that comes off of this previous cycle. The next resistance is up here at 42,300. And it is possible that it is headed over there because there are a lot of buyers in this market. Look where the momentum turned up right over here using the reversal scout. Remember, this is a level 4 study. You need to have the level 4 and be on Thinkorswim to run this. And this is where the cycle turned up. And this shifted. It was early. You can see right over there. This is the old cycle. And that told us about that low right there, and the momentum is still very strong. Here, when I look at the short term, this is what's called swamped. What does that mean? Well, this is the ETH right over here. Ethereum, this is Bitcoin. This was supposed to have a correction right in here, but it didn't. It still might have a couple days down, but it might have just been this sideways correction and headed up again. And that's why we're pointing up to that 4,200, because the energy from these more dominant cycles are super strong. And it's very reasonable to see this thing move to that level at 42,300. No matter how bullish or bearish anybody is, and I tend to not love cryptocurrencies as a whole, we're agnostic, and this is a bullish scenario when we look at this, and I'm not afraid to say it. I mean, it does look super good looking at the Bitcoin market. That's all of the futures I'm going to look at. Katie, you have a few of these ETFs and equities that you're going to look at, and I'll hand this over to you.
Okay, sounds good. We just have about 4 or 5.
Okay.
And let me know when you can see the weekly chart of Tesla.
Got it.
Okay, great. So we talked about this one a little bit earlier in the show. This was a positively configured cycle. It was looking really good. Didn't even get down into those lower support zones. Positively configured cycle, meaning it ends higher than where it began. It formed a cycle low right here, started to move up, got to that 78.6% fib retracement level that was formed from this high and that low, and backed off from there, was still okay until this candle on earnings. And then we broke below the cycle low support. So now we're coming up out of this mid-cycle timing period, minor cycle here, and we have a resistance zone here, minor resistance zone, and we would expect this zone to hold before making another move down into the timing period for this dominant cycle. That timing period is, let's see, January 14th to February 25th. We have a target zone here. This would be the 100% fib extension. It's already almost gotten there. So conservatively, we would project a retest of that, and then our next level down would be the 127.2% fib extension. If we switch over to the daily chart and we zoom in, you can see that that price action. This was a negatively configured cycle ending lower than where it began. And so we would project the next cycle to not take out the high. And that's what happened. It stalled at the short-term 78.6% fib. But then this one configured positively. So we would have expected it to be able to make a new high. I guess it got like a very slightly below there, but it did stall at those key levels. You have to keep an eye on them. The 78.6% fib broke through that cycle low support. So on the short term, we have this minor resistance zone in these pink boxes here, got up into there, backing off from there. We do have a daily cycle timing window from November 17th to November 29th. So we are looking for further downside, perhaps a retest of that recent low. So that is Tesla. Now let's go back to SMH, which is the semiconductor ETF. Oops. Get rid of that and zoom in so you can see better. This is a very positive look. Positively configured cycle, positively configured cycle. It ended just last week and moving up now very sharply through the 78.6% fib and heading for that prior cycle peak at 161.17. If it gets through there, we would project to, that's basically the same as the prior cycle peak. We have these further extension areas up here between about 169.5 and 178, 179. So that's kind of the more intermediate look. Over on the daily chart, we formed that intermediate low here. This is the one that corresponds to that, and moving up sharply, as you can see, through this short-term cycle peak, and now getting up into that towards that intermediate cycle peak. So this cycle, how would we project if it gets through there? Then maybe 159 to 165, somewhere in this area, it might hold. And then we have a daily cycle timing window coming out in mid-December. So this still looks good. Positive momentum with a green reversal scout and positive slim ribbon. So this could be a potential buying opportunity on a pullback as long as it didn't come back too far. So that is SMH. Let's go over to NVIDIA. NVIDIA looks very similar to this. Just 1 week off that low. These track very close to each other. So very similar. We're through that 78.6% fib. We've had the upturn in momentum now, which helps us to confirm the cycle lows. And we have these levels up here, 50% fib extension level at 533.35 and the 61.8 at 566. Over on the daily chart, there is the low that corresponds to the intermediate low through this prior cycle peak already. So we need to project a little bit higher. 498.500 would be reasonable. We have we have earnings coming up, first of all. And second of all, we have a daily cycle timing window towards the end of this month, beginning of next month. So this one you would need to be cautious just because of earnings. But if you wanted to avoid that, you could trade SMH. It trades very similarly. Next is Broadcom. This one is a little bit different. So we made this, it's a very strong move up here after this positively configured cycle. Then we had this period of consolidation. This corresponds to this minor cycle trough down here. Now we have this, this is SMH overlaid on this chart, and then the black cycle brackets are Broadcom. So made this minor cycle low and now moving up again, perhaps to get up as high as 984. That would be the 161.8% fib extension. Now this one does have a different timing window coming out 12/11 to 2/6. So we would expect probably this area to hold, and then this is very positively configured. So some, small retracement, we wouldn't expect it to really retrace too much farther than the support zones before possibly moving up again in line with the rest of the semiconductor market. Over on the daily chart, we are just at the top of this target zone. So we would need to do another draw with the fib extension tool to project higher. And that would be 984.74 is the next level up, with a daily cycle timing window coming up at the end of November, beginning of December. The other charts that were requested, Daniel, Nokia, and CLSK, I do not have updated analysis on those, but as a level 4 member, if you will send me your email, or you can send it to team@askSlim.com, we will be happy to work up those charts for you and send them over to you. That's it.
All right, absolutely great work. Just love the way you presented all of that. So thank you, Katie.
Sure.
All right, so I'm about to move forward. I want to show you right now where you can get more of our information. You can go over here for the new day trader service, which is live. Just click that sign up button, only $24.50 a month. Or if you want to see our cycle analysis workshop special, click that learn more button over there. And I'm going to tell you a little bit more about that in just a moment. So get ready to see so much more. All right, so the stock market analysis that so many of you have been waiting for, that we're getting to right now. We're going to do our analysis and projections. Make sure you read this slide, because that tells you about how you use the information that we provide and what that information is actually consists of. And this is a really important slide for you to read, because it's about taking trade ownership, doing your own analysis, and using our information to help you with that as support. This is the Cycle Analysis Workshop Special. You're going to learn my method of analysis developed over nearly 50 years. It took 2 years to write, 6 months to produce, and there are 24 video modules, plus many tools for tech videos attached to this. There's literally like a total of 50 or 60 something videos in there, but the key of the 24 video modules, this is online lifetime access. You don't need a special platform. And once you learn this, you're never going to look at charts the same as you did before. As you saw us presenting these and the results of the great work that the whole team does, this is where it all comes from really learning this. It's going to improve your directional decisions and help you project in both time and price. And a bonus, the first 25 that sign up for this is going to get this collector's book. It's the book I read back in 1975, Profit Magic of Stock Transaction Timing. And it's been out of print for decades. I have been collecting a whole bunch of them, knowing that I was going to do a special someday and include it in this. And that's what I'm doing right now. So the first 25 will get that collector's book. Also, I'm going to put a little thing in there, a greeting with my signature on there for you doing that. And also, you're going to get this amazing bonus 30-minute trading session with one of our members of the askSlim analytical team. And that's a bonus value of $400. So normally this is $12.97. We're going to take $400 off on this discount of $8.97. Plus you get those bonuses. And just make sure you go to the top of our website, as I showed, right up over there, and click on that, and you will really get a good sense. One more thing, you can go to workshops right over here, click Cycle Analysis Workshop, and it's going to take you to that page. You can get that special right over there, and you'll be able to see everything that's in there, including a little video that I prepared for you right there, and you'll get to see what is in every single one of these modules in here. So really important for you to go there and get that information, and then sign up by clicking that Learn More button right over there. And don't miss this unbelievable offer that we have right there, Cycle Analysis Workshop. All right, this is the stock market analysis, multiple time frame analysis and projections on SPY, weekly and daily analysis. And I'm going to show you, of course, our proprietary indicators, and we'll look at the market condition monitor, which is important to use no matter what kind of a trader you are. Let's take a look here as we switch over to the charts. I'm going to move out of Bitcoin right over here and go to SPY. So the SPY, these are just blank charts, as you can see. And if you were a person that, looked at candlesticks and moving averages and such, this is kind of the chart that you would see, but doesn't have all of the energies in there with the cycle analysis that we do. I'm going to put in that cycle analysis now, and you'll see that pop into there. And it's just unbelievable how different it is when you have that kind of information. And there you see the weekly on the left and the daily on the right. So I know that the majority of you have followed us for many years, followed me for many years. And let's just look right over here. You see those yellow ovals? Those are the periods where the energies were such that money flows were leaving the market. That's right over here where these cycles are coming down, these corrective periods or declining phases, as we say. That happened right over here, and it happened right over here. And you see the size of the declines. For the period where this was making this peak in here and almost got up to that 78.6%, I was saying this has a high probability of being the same kind of ABC pattern that you see right here. ABC, 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 ABC. There you see it. 10.9% correction that happened in there right almost exactly on time where we were looking for the low. We've had this in here forever, saying that the daily cycles synced in late October with the weekly, and that was almost as spot on as it could ever get. It launched off of that low, and there's no way that I or any analyst would ever figure that you could get this kind of move with a 7 to 9% gain, depending on which index, in that brief period of time. Now, this is only the second week off of this low. What's the probability of the second week making a peak? I mean, everywhere you look in here, you could see that off of the key lows and into the rising phases, those lasted on the upside for months before there was any kind of a correction. This one had a minor cycle that corrected right in here, as you could see. And this was a negatively configured cycle. So that set up a whole big bearish move right in there. This was one where that minor cycle was so strong. The dominant one was so strong, it just swamped it. There wasn't much of a correction in there. So the probability of this peaking here is near zero. The probability of it continuing up, and as we're showing it here, moving up to these areas, is very high. So you could see that there could be a continued rally on the minor cycle, some kind of a correction into the supports, and then a rally again out over here before it then starts to come down. There's that risky period out over here, somewhere March or April, where it's likely to come down again. But in the meantime, this is bullish. And it says higher prices. Resistance here at 440 on SPY. That's the 61.8 right there. That's mislabeled. That's the 78.6 right over there. And that is a very key level. And that might be where it gets up to and pauses. That would be at 449. And this old peak here at 459.44 is certainly a possibility, but we consider that an extreme. Now, I'll do my big picture analysis. Ray asked about that earlier, and there are a lot of people that are asking me about that. And the question is, this all-time high over here around 480, can it get through there? And I'm not going to give that away. I'm going to wait until I do my big picture analysis. But you've heard me say that I've thought for a long time, this was a cyclical bull market that is living in a secular bear market. And this period that we're in right now is a lot like the 70s. I'm going to stop right there, but it gives you some idea about what I'm thinking. So you could see there's no reason to think this bull leg is going to stop for a long period of time. Here is the daily patterns in here, and this is so cool because these minor cycles made the head and shoulders top, as you can see, and that's how head and shoulders tops are formed, because the cycles make that happen. When the right shoulder forms, it doesn't get to the high. That's what really tells you, and then when it breaks the neckline or that cycle low, it tells you that it's probably going to go down close to what the measurement is from the top of the head to the neckline. and you can see it practically tag that right over there, practically perfectly. And that was the bottom of the weekly pattern that we're looking at. So what do we say here on the short term, looking at this? Well, there is a possibility that these resistances are going to be meaningful right now, and you're going to go into some kind of a corrective process right in here, where it peaks somewhere in this area between 439, 440, right in there, and we're basically close to it, and then goes into some kind of a correction, or it gets through those and then gets to that next level up there about 450. I don't really know which is going to be, but the magnitude of this upside move is very strong. You can see the slim ribbon right over here, where the slim ribbon PO turns green, and that tells you that the momentum conditions are solid. When you look here at the weekly chart right over there, you see that green arrow. That's telling you the weekly reversal scout has turned up. That, and see that note there, the rising phases suggest a rally into November, December. That's been on there for quite a while. All of this really acting as it should. These supports here on the daily chart are rising because this is rising right now. So as this continues to go up, we'll be looking to see the corrective periods moving up, also the corrective targets. You'll notice that there are 3 tracks in here. This is the most negative track. This is the next, with the black with the arrows, is the most likely track. And this top one over here is a possible track, the more positive. And this kind of makes up like a cloud. You might see that where we think that that's what it's going to look like. Notice the configuration in here is positive. In other words, wherever this goes to and then has the correction, it likely next will go to higher highs. That's why we have that drawn in there that way. And this overall suggests quite a positive situation when I look at that, with the weekly turning up just 2 weeks into it, the daily getting past that peak right over there, just doing that today, and likely to have some kind of correction over the next couple of weeks, and then move back to the upside again. Let's go to our website right over here to the market condition indicator. This is an indicator included with level 3 and 4 memberships. And you can look at, depending on the kind of trader you are, you can look at the short term, intermediate term, near term, which is for very short swing traders, or intraday information. I have that because I have the more advanced version for level 4. Level 3 doesn't get the intraday. This shows you the conditions in here. This turned bullish on November 3rd for the short term. That's your daily chart. This turned bullish on November 3rd. So that told you about how to, set up your positions. That's the trade setup condition right over there. The IWM neutral, it's been more negative. The diamond is slightly bullish. So these are giving you that indication. If these, if these got more positive, these would turn to very bullish. So this gives you a great idea looking at this, what the conditions are. If you go from the trader to the time frame version, you can see that what the conditions are, the reversal scout and the slim ribbon. That's on the 2-hour, but let's go back to the daily, and you can see that those are all positive right there. So I'm going to go back to the trader version right over here, and you could just, take a look at which are the most positive and which are the most negative, looking at the trade setup conditions. So you could see very bullish, the top 5 right over there, which are Adobe, SMH, AMD, Netflix, MU. If I go here, you could see the worst 5 right there, which are LIT, PFE, FCX, TAN, and Deer. Those are in the very negative conditions right there. So that's a look at the MCM. I think it's extremely valuable. I wanted you to see what that looked like on the stock market. If I just go to SPY here, it just brings it right up for over there, and you can see it. So market condition monitor, make sure you get that. Conditions for the stock market are bullish, as you can see very clearly in this analysis. And really what is important is that you understand that we are bull bear agnostic. We do whatever the charts and indicators tell us. That's all 4 of us on this team, because we want you to be completely successful. And that can only be if we share this with you. And we don't share opinions. We share market conditions and analysis and let you use that for your along with your own work to your best advantage. Your success is our success. That is the look at the stock market. Please do check out our specials on X. Follow me at askSlim. On YouTube, it's askSlim Team. And we post on the YouTube all of the time. So make sure that you do subscribe. Give us a thumbs up there. Team, we're done.
That was a great session. It's always fun sharing our methodology and engaging with our members and the rest of the YouTube world.
Yep, that's great. Katie, you're on mute.
Have a great weekend, everybody.
All right, great job by the whole team, and I hope everybody loved this. That's Market Week Live. Next week, there is no Market Week. We'll be off, and then we'll be back in a couple of weeks live again. All right, that's it. See y'all.